What is loan against mutual funds? A loan against mutual fund, MF, is a financial product which can help you in two ways. The first way, rather than selling the MF units at a loss when you are forced to liquidate, is to raise money against the units. The second way is that if you have excess units and don't need them immediately, you can pledge them to the bank as collateral and get a loan in exchange. How does a loan against a mutual fund work? If you pledge your mutual fund units as collateral, the bank will hold them as a security for the loan. The bank will continue to earn returns on your investment, but you cannot sell your units while they are pledged to the bank. Advantages of loan against mutual funds: instant liquidity against mutual funds. Utilize lying idle shares. Lower interest rates than a personal loan. Intact ownership over funds. Financial support without losing assets. Flexibility in loan amount and tenure. No prepayment penalties. Disadvantages of loan against mutual funds: not all securities are eligible. Loss of compounding benefits. Borrowing is limited to only a certain value of the shares. Potential liquidation of investments in case of repayment failure. Dependency on the market for the performance of shares. General features of loan against mutual funds. This is a rough estimate and can vary based on multiple factors, including the specific market value of the shares, the borrower's security performance, the loan amount, and the repayment terms. Loan amount. In the case of equity MFs, up to 50% of the net asset value. In the case of fixed income mutual funds, to the tune of 70–80% of net asset value. ROI, up to 20% per annum. Repayment tenure, 6 months to 3 years. Collateral, mutual funds. What is the eligibility of a loan against mutual funds? Applicants below the age of 18 are not qualified to apply. Individual investors, non-resident Indians, firms, Hindu undivided families, trusts, companies, and other entities can avail of loans against mutual fund investments. The quantum of loan, tenure, and interest rate will be decided by the bank financing institution on the basis of various factors as well as the credit score. If you have a high credit score, you may be able to negotiate for a lower interest rate on your loan. The applicant should acquire approved shares, bonds, mutual funds of a minimum value of 10 lakhs rupees. Applicant must possess a savings, current, and demat account. What are the required documents to apply for a loan against mutual funds? If you are willing to apply for a loan against a mutual fund, you will have to submit all the below-mentioned documents as proof of your identity. PAN. Application form with a recent photograph. Proof of identity. Proof of address. Bank account proof. Demat account proof. Demat mutual fund holding statement. Income proof such as the latest ITR documents. Please note that these are only the basic eligibility criteria and documentation requirements. The actual eligibility requirements, documentation standards, and specific documents needed will depend on a number of factors, including the lender's policy at the time the loan is approved.